I hope everybody's doing well. I just wanted to come up with a quick little Q1, Q2 update on what's been happening economically in both this country, around the world, in the stock market with your portfolios. Just some positives coming out of 2021 as of now. We're seeing the reopening happening with the economy. So that, of course, is creating a great amount of joy for all of us, being able to get back out and doing our things as we're used to. So restaurants are opening up, and travel's opening up, and it looks as though hopefully we can get on an airplane soon and do some vacationing. Wouldn't that be a great thing to do? So again, reopening solid, happening as we speak. Commodity prices, the price of lumber, the price of things in the ground have come down. So that's also a positive for those that are doing some renovations, looking at building stuff. We've seen those prices come back down to earth in the last few months. We've seen interest rates drop, which is sending up the price of bonds, which is a good news story. So bond investors have had a pretty nice return relative to risk and return in the first 6 months of the year. We're seeing corporate earnings are up again as we get back and spend money. Corporate earnings are going up, and of course, with more profit, stocks typically follow suit. There's lots of money in the system. There's been a huge flood of capital from most governments. So lots of capital in the system. Lots of capital typically means solid stock markets moving forward. Some of the negatives that we're seeing right now is we're seeing inflation. This is one of the big concerns, is inflation, is what's happening to the price of goods. We're seeing inflation go up. I mean, I can recall a year ago the price of gas was 85 cents a liter. Now it's $1.50. So inflation is here with us. It's not going away. That's one of the biggest challenges we face in the next 6 to 24 months. Unemployment is still relatively high. There are those that have been laid off through the pandemic that haven't gotten back to work. So unemployment is a bit of an issue with the economic output these days. You're seeing rising home prices for new buyers. Really tough time for new buyers getting into the market. It seems every house is 600, 700,000, and even average houses years ago that you could have afforded are no longer affordable. But hopefully at some point those rates of increase slow down a little bit. We're also happy to say that the performance of Q1 and Q2 has been exactly on track. If you're an investor and your targeted return is 5%, 6%, there's a really good chance that you've kind of met your 6-month target. So that's a positive story. Moving forward, some things to expect and look forward to. Good, bad, or indifferent is higher prices, inflation. That is going to be the buzzword, is inflation. Prices are going up, and it makes it more difficult for those on a fixed income. We are going to see possibly higher wages, with the fact that people are looking to acquire great talent and find talent. Wages may be going up in the near future. We do know that in the next 6, 12, 18 months, the story is going to be volatile stock markets. Some days up, some days down, up and down. Emotionally, I know it's challenging, but just bear with it. What typically happens is we have a few bad days and we have a few good days, and it all tends to work itself out. We are seeing real estate prices go up, hopefully not as fast as they have been. Again, it's great when it goes up when you own a house. It's not a great thing when you're looking to acquire a home, but real estate prices will continue to grow, but just maybe not as fast as we've seen in the past 6 to 18 months. Another good story is the fact that Canadians are getting vaccinated. Again, in Ontario, 80% first dose, 65% second dose. It just means that we can get back to normal a bit quicker. So for those out there that have been vaccinated, great. And hopefully that alone will reduce the need of any concerns in the third and fourth quarter of this year of potentially some restrictions being placed on Ontarians and Canadians. We are seeing, again, low interest rates. For investors, low interest rates mean that there's not a great return, obviously, by buying a GIC or a bank account product. So with low interest rates, there are some alternatives. Feel free to reach out. We're happy to share those with you. But we are going to be staying in a low interest rate environment, and we do expect that the second half of this year, based on all the experts, that the market will have a pretty solid second half of the year. 2022 looks pretty solid as well. So hopefully we can get through some of the hiccups, the Delta variant in the U.S. and some of the issues that are happening around the world. We get more people vaccinated. We get back to a new normal. So I just wanted to reach out, give all of you an update. If you've got a question, a thought, a concern, feel free to reach out to the office. More than happy to have a conversation by Zoom, by phone call, or feel free to come in. We are open to see all of you. So stay well, have a great summer, enjoy the restaurants, enjoy getting out, and we look forward to seeing you real soon.